Well, more heat on Rupert Murdoch's News Corp today. Two different proxy advisory firms are telling News Corp investors to vote against the re-election of some of its key board members. Glass Lewis, for example, said shareholders should vote against both James and Lachlan Murdoch, as well as 4 other directors. Joining us to discuss this recommendation is Robert McCormick, Chief Policy Officer for Glass Lewis. We know that ISS also advised investors to vote against the re-election of 13 out of 15 board members. Bob joins us this evening from New York. And Bob, what is your concern right now? Is it that there is too cozy a board at News Corp?
Yeah, there's a bit of a history of a cozy board here. If you look at the board, 15 members, 6 are insiders, which is extremely high for such a large multinational company. A 7th is a son, Lachlan, and even the 8 independent directors. 2 are long-serving, 1 former executive, and another one is representing the Bancroft family, 31-year-old opera singer. So clearly not a board that most very large companies would have in terms of a high level of independence and high-powered independent members.
Bob, you're not suggesting to investors that they vote against Rupert Murdoch being on the board, but you highlighted his sons and the advice you're giving them. ISS, another firm suggesting Rupert Murdoch should go. Now, when you raise a concern like this, can you explain to our viewers the impact that it has? How often do investors follow your guidance?
It really varies, and it could be for lots of different reasons, but really the focus is on identifying the concerns for our investors. Now, this is obviously a unique situation with the dual-class capitalization. The Murdochs control 40% of the vote, but only 12% of the economic value. So it's unlikely that any director would be unseated purely by the vote of the unaffiliated directors, unaffiliated shareholders. However, a large vote against any of the current incumbent directors, including the 2 Murdoch sons, would be a really strong signal that shareholders are very dissatisfied with the current board structure.
Bob, you make it sound like this kind of thing can kind of happen every once in a while. Isn't good. This is fairly scandalous that the board isn't independent and doesn't respond or doesn't reflect the shareholder base.
Yeah, I think if you look at I just did a quick research. If you look at New York Times, Washington Post, they have 3 insiders, 2 insiders, respectively, considerably lower number of insiders. And I think this goes back to, it's almost like a board from the 1970s or something, where it's a lot of cozy insiders, friends of the family, former executives, clearly not representative of the larger market, which is the owner. And, you know, shareholders could say, well, I'll make a bargain, right? I will buy the company, sort of caveat emptor, know there's a significant level of insider ownership. However, the company also has a bargain, too, that if they go to the public markets, there's a certain level of expectation they'll have that shareholders will have some input into the direction of the board.
That doesn't happen with this company. What kind of other bad things have we seen happen when companies don't have truly independent boards?
Well, particularly when you have a situation like this, where you have an extremely charismatic, powerful founder, CEO, chairman who can really control both the executive team and the board team. That is one big challenge. The second is a very long-standing ownership and control. So you take that, couple that with a very ineffectual board, evidenced by the potential, the concern about the Shine acquisition, the concern about the hacking into the telephones. That really shows a weak board. And also, if you look at the compensation practices, there's been a really gross disconnect between pay and performance for several years at this company. The highest paid CEO, fixed salary, of $8 million is Rupert Murdoch, which is far, far beyond any other S&P 100 CEO. Clearly not a lot of that compensation is at risk if you have $8 million guaranteed. And even the bonus paid to Mr. Roger Ailes is guaranteed. It's an oxymoron, a guaranteed bonus, right, of $1.25 million, regardless of performance. So the compensation can be a really good window into the operation of the board and its ability to provide independent oversight.
Bob, I speak to a lot of News Corp investors. A lot of them have invested in this company for a long time. They're used to investing in the company that's run by Rupert Murdoch. Now, have you heard from any of these investors over the last 24 hours that said, I'm glad you're doing this, actually, I'm going to follow what you're doing?
I haven't talked to any of our clients specifically, but, well, I should take that back with one big exception. AXI, which is the Australian Council of Superannuation Investors, has come out quite publicly against the same 6 directors, coincidentally, that we had recommended against. CalPERS is also raising concerns about the disproportionate control. Other shareholders have come out publicly, Change to Win, Christian Brothers, about concerns with either the combined chairman, CEO, or even concerns about the newly appointed independent director.
Right.
So there's definitely a broad group of various shareholders who have significant concerns with the company and it coming out quite publicly, both of which are pretty rare.
Yeah. Bob, appreciate your perspective, and we'll learn more about this likely at the News Corp annual meeting later this month. Bob McCormick, Chief Policy Officer for Glass Lewis.